Hey everybody, it's Bruce here with Stock Markets with Bruce. Welcome to my channel. Today's video is, well, titled, Are Royal Caribbean Shares Overpriced? They might be. Thank you for subscribing to my channel, giving my videos thumbs ups, and I love your comments. Let me know your thoughts on the stock market. Today, I wanted to talk about Royal Caribbean because the shares have hit a pretty good price here. We just closed yesterday around the $72 mark, and I'm kind of wondering if maybe the shares have reached a bit of a full value situation. They're not sailing. They have no paying customers. Let's take a look at the charts. If you take a look here on the left, the chart in red, you'll notice that the stock about a year ago, August, was in the $108, $110 range, went up to about $135. Then it cratered all the way down into the 20s and has since had a bit of a recovery. It isn't quite back to the high it had back in May, but it's getting awful close. On the right, the chart shows you the last month or so from the low 50s up to the $70 range. And the question is, can the shares go higher from here, or are they overpriced? My hunch is they are at full value, if not overpriced right now. And the reason is simple. A year ago in 2019, the company was flying and everything was working for them. They were sold out on virtually every cruise. Some cruises, they would have 108 to 110% capacity, which means they had 3, 4, 5 people in a cabin. They were getting top dollar for their drink packages. They were getting their spa packages, the shore excursions. Everything was working for them. And at that time, with a $135 stock, the company was trading around 20 times earnings or so, making $6 a share. But in the last 6 months, since early part of this year with the virus, they have been totally shut down. They aren't putting a single paying passenger on any of these ships anywhere in the world, and they are now trying to run a company. Basically, they're losing about $9 million a day by just keeping their ships at sea with a minimal number of crew on board. They've repatriated all their crews. They've laid off all their support staff on shore. Their offices are empty because, of course, they are not allowed to social gather and all this sort of stuff. They are trying to run the company on the cheap, but even so, $250 to $270 million a month is going out the door just to hang around, and that is more than $3 billion a year seeping out of the company's bank account. Now, they've already written off billions for the year. They've borrowed billions of dollars from bankers, and they're going to be paying anywhere from 8 to 15% interest rates on their debt. They have billions on the books, and even if they went back to full-blown sailing next year, 2021, they will not make $6 a share in profit. They'll be lucky to make $3. But in reality, they're not going to be sailing at full capacity for quite some time. It looks very likely that sailing will start in certain areas of the globe, piecemeal here, piecemeal there. The ships will be likely under an occupancy restriction. It might be 50 to 70%. And so we're going to have a company here that at best will make $2 a share when they get back into operation. But that might be a year to 2 years from now. So folks, if the company is making $2 a share in profit and it trades at 20 times earnings, that is a $40 stock price. Right now, it's trading at $70 a share, and they're making nothing. They're losing $250 million a month. In reality, the shares really should be trading around $15 to $20 a share while this delay is being, endured. And when they do come back to sailing, they'll likely start with 15-20% of their fleet for the first few months, and then they'll add another 10% every month or two, and slowly but surely get to 70, 80, 90% of their fleet sailing again. What I haven't mentioned is there are at least 6 or 7 ships that they own that might have to be sold off or scrapped because they don't have sufficient balconies to make them worthwhile once sailing begins. Anyway, folks, that's the story from this guy's point of view. I think they're way overvalued at $70 a share. Don't know why they're trading here. People have high expectations, I guess. But my thinking is it's at least another year before we get anywhere near any kind of normalcy, maybe a year and a half. And between now and then, the shares, I think, are going to be a lot lower than they are now. We'll see. We'll stay on top of it. Thank you for following me on Stock Markets with Bruce. Thank you for your support. I really do appreciate it. Please subscribe if you can. Throw the video a thumbs up, and I love your comments. We'll talk to you next time, everybody. Bye for now.